Hello, everybody. I'm super excited today. I just finished dancing. I don't know why I was dancing. I believe I was dancing maybe because I'm closing the deal this week. It's not really particularly about the deal. It's just because the deal is one of the most stressful deals I've ever had to do for many reasons or many unnecessary reasons. For I'm happy that it's almost behind me and I will move forward. I will continue the investment. So I'm sure that's how I was dancing and just unnecessarily happy. So if you look at me, I think I'm really sweating. But don't worry, we're good. So now let's go back to what we have today. For those of you that do not know me, I am Bibi Ofiri, and today we'll be talking about the big, beautiful bill. That is what they call it right now. I had very mixed feelings, and literally it's because of some things that I hold personal. Regardless, some part of it still favors some of them. For those of you that have heard me talk about how I came into the US, that my daughter was sick and she had about 50-50 chances of living. She was breathing at a 2%, and the other one was life support. So literally she was in Britain. So I felt I was going to lose her. Besides, I didn't have money. So I was thinking about how would I pay the bill. To cut the long story short, I had a very big bill and it would have taken me many years to have paid it. But because of the Affordable Care, which is the Obamacare, I was able to go through that process. And it really saved my life and that of my daughter. Aside that, I remember when we were also going through foreclosure, we were homeless for like 2 years. We had a federal support for SNAP. We used to get food and meal that sustained us for literally 16 to 24 months. And I'm really grateful about that opportunity. But it's really sad that this deal is cutting about $1 trillion of Medicare and Medicaid, and also SNAP benefits from the most vulnerable ones and people that really need it. It's personal for me because it helped me. I don't think without it I would have survived. No way would that have happened. So I'm hoping that something is done in the near future and for that those opportunities to come back, because so many people will really be affected. In short, people would die. My daughter would have died, truth be told. She would have died if I didn't have that opportunity. So I want to imagine that there's so many people that are in worse situation than I am, and I will need such. So this, whoever is in charge, is there's something about it. So let's push that to the sideline. Let's talk about the benefit for you if you are in the real estate or in the multifamily space. Real estate has never been this beautiful. It's crazy, guys. In case you missed it, Congress just passed a very big, gigantic bill just few days ago, and it was signed into law on July 4th. It is a sweeping piece of legislation that brings a significant benefit to real estate and wealth building. So literally, it's going to be a wealth transfer, and that's the truth. It's only going to be available to those that are ready to take the step right now. There's going to be a wealth transfer. The bill says it all. If you get to listen to what they're saying about the bill, they'll tell you it's for the rich. And truth be told, from my analysis, I believe that's what it is. But if you're not rich right now, you can also position yourself to take advantage of the opportunities that are available to people that are investing in real estate or multifamily. It's really super excited. I can't wait to break it down for you to understand, and you can start your journey right now. This bill has created some political issues. Like I always say, this is not a political platform. It's more about multifamily investing. But literally, there's really no way we can talk about investing in the US or any part of the world without talking about policies. Policies significantly affect your investment. So we can't take away policies, bills, we can't take away all these things from our conversation. So I'm going to run through some aspects of it, and I'm not going to dive deep into the issues with this bill, but I'm going to touch on it because it's part of the things I need to address. So two very negative things about the bill is that, according to CBO, the bill is going to create a debt deficit for the U.S. national debt because of the tax cuts that the federal government is going to be giving to people. Because of that, it's going to create a significant deficit on our national debt. Remember, I told you, I said last year we had a national debt of $36.4 trillion. Now, they passed the bill. It is projected to be about 3.4 trillion to about 5 trillion. Regardless regardless, is significant. 3.4 trillion to 5 trillion. Remember, for some time now, I've really been talking, I've been putting some spotlight into the national debt. And that is because it's going to have a significant effect on we investors because of interest rate. Remember, I spoke about the interest rate. Interest rates that we use for mortgages is not really about the Fed's interest rate. It's really about the Treasury. That is what determines the interest rate that we use to buy properties or use for investment. So the point here is the more debt we owe, the higher the interest rate. And that is relatively because we need to borrow more money from people to buy up our debt. And in exchange, we give them Treasury bills. But the problem with that is you have to kind of incentivize them because it's like you have more supplies than the demand. So once that is the case, it means that you have to make it favorable for them to buy up your treasury in exchange for your debt. So that is really the problem. And remember, recently Moody just downgraded the US, I think about 2 months ago. That just happened. So outside the US, international investors are really losing faith in the ability for the US to pay up their debt. So looking at this, and we adding another 3.4 to 5 trillion dollars to the national debt. It's a significant, guys. It's not funny. And aside from we having difficulties in paying it, I really don't think we can even pay it regardless. I don't think we can. But leave that one aside. Another issue is that these debts are being transferred to the younger ones. It's a lot. It's a lot of responsibilities that we're putting on the younger ones. The last time the US was not in a debt was in 2000. That was in Kington. Ever since then, the US has been growing its debt. But now, looking at this, we are looking at another 5 trillion debt. Ultimately, it's possible that it's going to be more than that. And that is significantly from the tax cuts that they're giving to people. So, like I said, I just needed to give you a summary about some of the bad areas of this debt. There are other parts of it, but concentrating on the US debt because I've been talking so much about it recently. So now let's go to the benefit why this bill is good for every investor, especially in the real estate or in the multifamily. I can't just wait to dive into what you should expect. So I'll be going through my note because this is pretty new. We've not really gotten a grasp of it, so I'm going to be reading from my research and we'll be discussing it. So from the big beautiful bill that we just recently passed, one of the benefits that you should think about as a real estate investor is you get to keep more rental income. Before now there was a limit to it, but now it's forever. There is no limitation to it. If you're into rental, you get to keep more of it. Let me give you an example of what that looks like. So if you own a rental property, you can now keep about 20% of your rent tax-free. So before this bill, the 20% of your rental was supposed to expire very soon. I think next year it was supposed to expire. But right now it's forever, it's permanent. So every time you make an income, you can keep 20% of your rental income. Is that not beautiful? I'm sure you know it is. So let me make it very relatable to you. So let's say you collected rent after paying up your expenses. You made $50,000 and the CPA calculated it, and maybe you were supposed to pay $40,000 from the $50,000 to the IRS. In this case, you owed on to 20% of that $40,000 that you're supposed to pay to the IRS. And right now it is forever. So let's look at the second point. Fintech will benefit you as a real estate or a multifamily investor. So before now, we used to deduct a mortgage interest. So at the end of the year, you always find out that the mortgage company always send you a statement, which is the mortgage interest. Typically, what they do with the mortgage interest is you give it to your CPA, and at the end, before they file your taxes, they're going to deduct it from your profit. Whatever it is you made, it's going to be deducted from it. That is going to give you more money to take on and give you more taxes to the government. So right now, this is still on, and it is in rules section 163H of the bill that we just recently signed. The third one is the 1031 exchange is still on the table. That is not going anywhere. An example of this is you buy a property for $300,000 and maybe after 2 years you sold it for $500,000. It means that you made a gain of $200,000. Instead of you paying the government some percentage from the $200,000 as your taxes, you can take that money and roll it over and exchange it to buy a bigger property, a bigger renter, in exchange of you paying IRS taxes. So I know many of us are familiar with 1031 exchange. That is still on the table. Another rule in the bill is under section 163J of the bill. What that says is if you borrow money to buy a rental property, you can actually deduct the interest you paid on that loan. This this is a beautiful one, guys, especially if those properties are big, those $1 million type of properties. You understand the benefit from this. For example, you bought a property in December 2024, and let's say from January 2025, you paid interest to December. Now, total interest you've paid will be deducted from the amount that is due to the IRS. So you're going to deduct it before you now file your taxes. So let's say, for example, you paid interest for your mortgage from January to December, maybe $8,000. So before you file your taxes, the $8,000 will be deducted from it. This will give you more money to take on. This is very cool, especially if the properties are in millions of dollars. That is when you see the significance of it, because typically right now for properties we pay about 40 something to about 70 something thousand on interest, depending on the amount of the property, and this is monthly. So you can imagine that kind of amount if you're paying about, let's say, $1 million, maybe $1.2 million from January to December. You can imagine what kind of deductions that will give to you. Another exciting one is the opportunity zones. For those of you that do investments in opportunity zones, let's say for example you don't do the 1031 exchange and you sold the property and you have capital gain, and some people, instead of doing the 1031 exchange, they rather invest that money in opportunity zones where they get tax cuts and other benefits from the federal government because they are investing. And I think then it was about 7 years. I think right now they're extending it for another 10 years and it's going to be renewed every 10 years or so. I'm not a professional in the opportunity zone business, but right now they've extended the opportunity zone for another 10 years. I believe it's permanent. I think they will keep renewing it like that. Go and do your research on that. And that is in section 1400Z of the new bill. If you are in affordable housing, if you're a developer in the affordable housing business, there's a significant amount of incentives for developers or people that are into value add in the affordable business. The government will be giving a lot of tax credit to those people that are investing or are developers in the low income business, because they're looking for ways to help the housing crisis that they're facing in the country. So this is like an incentive for more people to go into affordable housing. So in this case, your tax bill is going to be reduced significantly if you are under that program of affordable housing with the government. It's very, very interesting and a very good incentive for people to go into it, because one of the problems we're having now in the country is affordability. There are some things that are related to that. The main things have gone up: labor costs, material costs, many things. Another conversation we should be having is, would those housing really be affordable? Looking at where prices of things are right now, but that is another conversation for another day. But the idea is the government is giving people that are in affordable housing significant tax cuts for investing or developing in that business. And you can find that in the rule under LIHTC, that's low income housing tax credit, in the bill. This particular one I want to mention is very exciting for people that are in the multifamily space: bonus depreciation. For those of you that are aware, it was supposed to expire. That is, we could no more expedite impair costs or those assets or those are parts of our properties that are likely to depreciate, that have a short-term lifespan, and also renovation repairs that have been done, and get them in year one of when you purchase that property. You can get them all at once. I'm not going into detail on how long the 100% is going to last. For the 2017 one that came up, every year it was going down. I mean, the first 4 years was 100, and afterwards we're saying going down and just meant to expire next year. But in this case, it's going to be permanent. It's not going to go off. It's not going to expire. I think for the first 4 years, please go and verify. It's going to be 100% bonus depreciation. That is, after doing your cost evaluation, whatever it is that you can write off. I think for this year is supposed to be 40%, 2025. But right now, for the next tax year, which is 2026, it's going to be 100%. I believe it's for the next 4 years. It to start going down, but it's permanent. It's not going to stop. Just keep going that way. But go and verify. You can find this in the bill under the rules section 168K under bonus depreciation. It is well explained in that. So for example, you spend $50,000 upgrading a rental property, you cannot subtract the entire $50,000 for the repairs that was done in that year. This is going to be very favorable for people that are into value add. Tell you those heavy value add projects, you can write off all those expenses in year one. this deal. So value add multifamily investors, this is the time for you to start getting those deals going to be significantly beneficial to you. I remember at the beginning of the year, I was talking about wealth transfer. I spoke about it intensively, and I remember that I said that a wealth transfer, the ability for you to transfer wealth to your child, was going to expire in 2026. For right now, it's permanent. That is a good thing. And not just that it's permanent. Before it used to be 12 million. That is, if you are wealthy, could transfer your entire wealth. Let's say if you had 12 million, you could transfer 12 million to your kid. That's free. That is, they will not be paying tax when you die to lose asset that was transferred to them. If you want to know more about how that works, refer back to my video for transfer to break it down how that works. I think in 2026 it was supposed to go back to 7 million. Literally meant that could only give your child $7 million as free. Then every other one be taxed. Maybe you worked more than 7 million. That would have been the case. But right now it was supposed to expire. The other thing was that it was supposed to go back to 7 million. Now it's now 15 million for singles and 30 million for couples. It means that if you have gained wealth, you and your spouse can transfer 30 million to your kids tax-free. Isn't that wonderful? That is the way the wealthy build wealth, by transferring it tax-free to their husband. That is the way it's done. Right now, we have the ability to do more. 15 million for singles, 30 million for couples to their children. I don't know what other way you can ensure that you continue to create generational wealth for your family. Another issue is you also need to orientate, and because you know that if you don't, it will squander the wealth in just 1 year. If you don't give them the ability to be responsible. So that's another conversation for another day. The idea is you can transfer significant amount of wealth to them. And you can find that in Rule Section 2010C, the bill. Another one is bigger SOX deduction. This is going to be beneficial for high tax states like Texas, California, New York, states that have very high tax bracket. It stays definitely for you. Right now, the rule states that sub-cap is separately increased to 40,000 between 2025 to 2029. But now you can deduct up to 40,000 from the state and local taxes instead of just 10,000. So when it was 10,000, you could deduct from your state or local taxes. Right now, with the sub deductions, you can do way more than that. For example, after your expenses and all that, owing the state taxes $100,000. So for now, you could just deduct $10,000 before you file your state tax. Right now, $100,000 instead of you paying $90,000 from it. Now you're going to deduct $40,000, so you'll be paying the state $60,000. Isn't that wonderful? But some may woo and go with this real estate or multifamily what benefits the most. All the 20% rental income deduction, the mortgage interest deduction, the 1031 exchange, the deduction on loan interest, they're all going to be beneficial to those that are landlords, homeowners, investors, LPs, multifamily investors. These are for you. So if you fall into this category, please take advantage of it. So for the opportunities, it's going to be very beneficial to the developers, and for the bonus depreciation is for people that are into value adds, people that are into renovations. That would be most beneficial for people like that, because you're going to have the opportunity to write off all your entire repair costs in your one significant, mind-blowing, that. So that is it. The other one is, let's say, tax raised asset. The one I spoke about, word transfer, is going to be beneficial to families, especially high income earners, the people that have significant wealth, the millionaires, the billionaires. This is beneficial for them to transfer their wealth to their kids. The soft cap deduction is beneficial to those that are in states that have high tax brackets like Texas, California, New York. You know them. Those states, this is very beneficial to them. It's going to reduce the individual tax income significantly. For affordable housing, it's going to be beneficial to syndicators like us, and also beneficial to developers. So many of us fall into this category, so we need to start taking advantage of this. Like I always say, but there's a problem. There's always an opportunity somewhere. You just really need to look deep deep and see where your opportunity is and take advantage of it. If you are investing in real estate or in multifamily, the Trump administration just gave you a green light to start building wealth. That is what it is. There's going to be a significant wealth transfer from the poor to the rich, or for those that are well positioned to gain that wealth. So it's a green light for you to start right now. That's the time for you to start maximizing deductions. Use smart strategies like the opportunity zones and the 1031 exchange. Grow your portfolio while taxes are low. Different administrations, different policies. Regardless, I think you have about 3 to 4 years to take advantage of many of them. Although some of them are permanent, but you remember another administration can come and change things. So make hay while the sun shines. That is what I would say. I hope you've enjoyed my breakdown of this. And also, I also want to mention that this is not a political stage, but there is no way we can talk about the impact of policies on our investment without having a touch or a sprinkle of politics. We just have to talk about those things, policies. These things affect us, and we always look for ways to mitigate the risk and also take advantage of the opportunities. If you are looking to start your multifamily journey, remember, this bill is literally for people like you. And if you are also looking to build wealth, I can tell you that this is one of the best ways to build wealth. If you're looking for a way to start that up, reach out to us. I will be sure to direct you on how to go about it. Once again, my name is Bibi Ofiri. I look forward to seeing you in my next episode.